All right, we are live. Hello, everyone, and welcome to another week. And I hope you're all having a great week. And this is the Dividend Power Hour. My name is Mark Rushin. I am a CPA. If you guys are out there listening in, let me know if you can hear me. Just give me a thumbs up or in the comment section. But this is just really a weekly show that we do. I kind of go through some economic updates as well as just give me a chance to interact with you. Is there questions that you have regarding the macro environment, just to get kind of my opinion? And that's the thing, is all of this is just my opinion. So to begin, let me know, did you guys buy any stocks this week? Are there any stocks in particular? I know we're in the thick of earnings, so there could be some big swings. I tend to not do a ton of buying and selling during earnings weeks. I like to take that wait and see approach, look at the report. But what we're going to do today is we're going to look at a lot of those reports, particularly the dividend stocks that have reported, some notable ones. Obviously, we're not going to go through all of them because we did get a ton of reports in the past week since we last did our show last Thursday. But we are definitely going to go through those. So as I get the slides kind of set up here, I want you to definitely let me know, did you buy any stocks this week? Let me know down in the comments section below. So with that being said, again, this is the Dividend Power Hour. This is July 27th, 2023. Thank you guys for joining. And again, if you guys do have questions, definitely put those in the comments section, and I will get to as many as I can. I know we got a ton of questions in the past few times that we've done this Dividend Power Hour. It's been great to interact with a lot of you guys, the followers, just to get questions, see what kind of stocks you guys are buying, see what you are thinking is going on in the market as well, because it's always, we kind of try to put our minds together. But we have a jam-packed show set for you guys today. A lot of great information just to kind of catch you up on what's going on in the markets and what's going on with a lot of the dividend stocks that have reported so far in this week. So let's start with our economic outlook that we always like to take a look at. And this is the return of the Dow. So today, I guess this is bad luck, but today we officially snapped the 13-day winning streak. So we snapped 13 straight days of gains for the Dow. Had we beaten that, we're going to look on the next slide, it would have been quite a feat there. But year to date, the Dow has climbed back up to nearly 7% on the year, but still really trailing the S&P 500, which is up year to date by 14%. So really half of what the S&P has done so far this year. In terms of valuation, we're still estimating around 230, and we upped that I think it was last week we upped that to 230 for the S&P. So that puts us at 19.7 times, a slight tick higher from the prior week. And again, we tend to trade at an average of 16 times. This is on a price to earnings multiple over the past few decades. So what is some stuff that we saw this week? So consumer confidence came out recently. This consumer confidence index jumped up to 217 in July. But future confidence lags. So I want to show you guys here the consumer confidence stuff that we had. So hopefully you can see the screen here for our report. So we did jump. Things did improve in July. And this is just a kind of think of it as a survey that goes out, what consumers are thinking about right now in terms of the economy. So you can kind of see here, this is data dating back to 2007. I can see if I can zoom in here for you guys. Dating back to 2007, you can see we've had a nice tick higher here. We are moving back in the right direction in levels that we saw around 2021. We're about halfway there still, but things, are looking. People are starting to get more confident. Inflation has been coming down. We've seen wages tick a little bit higher, so there's more purchasing power out there for investors and just consumers in general, not just investors. But the thing that I want to point out here is they also do this present situation and expectations index. So this one here is going to be our regular. Think of it as the present right now. So this is your present situation index, how folks are feeling right now. And then this light blue one is going to be more of an expectation. So this is going to be, think about it 6 months out. Where are things? How confident are you as a consumer? How confident are you in the business environment, in the economy as a whole? And when you look at that, you see a big gap. And when we date back all the way back to 2007, a lot of these big gaps, when the present situation is on the higher end, tend to not be well. It usually precedes a recession. Now, 2020 was more of a pandemic-induced recession, but you can see the gap here between the present day situation and the expectations. It's a pretty wide gap. Folks aren't, all that confident looking out 6 months from now, 6 months plus, I should say. So that's just something to kind of keep an eye on. Now, it did tick higher along with the regular consumer price index that we saw up here. So that's at least a positive there, but it's still a pretty wide gap there between both of those. So something to kind of keep an eye on as we move forward and see more of those consumer indexes that come across. So let's keep moving here. Unemployment, or our employment section, I should say, jobless claims dropped yet again. So it's a second week in a row we've seen jobless claims drop. They dropped by about 7,000, and we are now at 221,000 in terms of jobless claims. I like to look at the 4-week moving average, and that also dropped. We had seen that continue to move higher, but the 4-week moving average dropped by 3750 to now having a 4-week average of 233,750. In terms of housing has continued to be a hot area. Home builders hitting all-time highs. The average 30-year mortgage is sitting at 7.2%, and we still have an inventory shortage. So we have high 30-year mortgage. You have current homeowners that are sitting on sub 4%, maybe even sub 3% 30-year mortgage rates, not really looking to move. And just the home builders cannot build these fast enough. So what else went on in the economy this week? Well, recently today, in fact, we got our updated Q2 GDP report, which came in above expectations. We will talk about that a little bit more on the slides coming here. But we saw Q2 GDP grew to 2.4%. So that was definitely a positive. So let me move over here and take a look at the comments just to kind of catch up and see where things are at, see what you guys have been buying. Again, if you are just joining, let me know in the comment section, what did you buy this week? So let's take a look here. Chris is saying, hello, how you doing, Chris? Thanks for joining again. Steve bought Lowe's. I think Lowe's is a great. Home Depot and Lowe's are two that, definitely we're seeing the home builders surge, and usually what coincides with that is seeing Lowe's and Home Depot. And both of those stocks actually have been moving quite well of late. I know we talk about both of those stocks a lot on the Dividend Power Hour and just on my channel in general. I'm a big fan of those big dividend growth stocks. They kind of offer you the best of both worlds. You're getting the growth side of things, a little bit of growth side, and you're also getting a decent yield, 2 to 3% yield, but strong dividend growth. And that's what I'm always looking for in a stock, is strong dividend growth there. So what else we got here? Chris didn't buy any stocks this week. That's all right. I haven't bought any new stocks. I've been doing a lot of options. So when it comes to earnings season, I like to play with a lot of options. And we've been having, or I shouldn't say I have been having my best month to date right now. So things have been going really well. We had a big Coinbase one that hit hard, and that's all posted in our Cash Flow University. So I have a paid Discord that I put out. I put a link to in all of my videos that I do, all of the Dividend Power Hour. I can definitely put that in there, and you can see all of the trades from all of the teachers there in Cash Flow University. So we hit a big one from Coinbase this past week. So that was a good one. Total Returns was buying some Avalon Bay. Bertrand, good evening to you as well. Lex has been buying some Target. Definitely, I had an option contract on Target. Target's been one that's been getting hammered. I think they're a little bit different from Walmart. Walmart has a lot more exposure to grocery, I should say. Target's kind of moving their mix around a little bit more, but the valuation just makes sense. But being that it was so low, and assuming we could see some volatility moving forward, not assuming, but thinking, I decided to sell a cash secured put. Got paid, $300-400 on that one. So that's been a solid one as well. But it's one that I want to buy. So what I do is I sell a cash secured put, collect myself some premium, and I could buy the stock lower if the stock does move lower. It didn't move lower towards my strike, so I collected my premium, and we're going to do it again. So that's one way I try to add, between $2,000 and $3,000 per month just from collecting premiums and selling both cash secured puts as well as covered calls and option spreads. So that's been a good one for me as well. What else we got here? I bought 100 shares of Key Corp for Steve. William, how you doing? Thanks for joining. So Steven has some questions here. Do you have any insight on the Kenvue Johnson & Johnson spinoff? So that was recently announced that they're going to go out to do an exchange that allows Johnson & Johnson owners where you can exchange your if you own Johnson & Johnson during the split, you can exchange your J&J shares for shares of Kenvue. So there's going to be more information coming out on that. For me, I think right now I'm going to stick with J&J. I like the pharmaceutical side of things. I like where medical devices is continuing to grow. A lot more operations are going on in this post-COVID, post-pandemic world now. So that's really started. And they have a loaded pipeline in terms of pharmaceutical. Consumer health has a lot of those big time brand names, Band-Aid, Listerine. There's a ton of them, that Motrin, Tylenol, that go out there, Zyrtec. It's just a slow moving, a consistent grower. So I think that stock's up around 10%, I want to say, since going public there. So for me right now, and I haven't looked at the latest results for Kenvue. I know they recently reported, but I think I'm going to stick with my J&J for now. All right. What else? What else did you guys buy this week? The J, smash that like button. That is right. Thank you, my friend. Great to see you again. Matthew, good day to you. Great to see you. Detron, how are we doing? Thanks for joining a member there for joining our Dividend Power Hour. Always great to have the members in the house as well, especially live. You know, I see a lot of comments on people that rewatch the live show, and I can respond to those when I see them, but it's always great to see your guys' comments here, and I can respond to any questions that you have. So Kath, great to see you. Another returning person there on the Dividend Power Hour, but no buys, no problem there. GIS this week for James. The J is loading up on Disney. Disney's still trading in that sub, what are we at, the mid 80s right now, I think is where we've been. That's another one. So Target that Lex mentioned, and Disney was another one I sold a cash secured put on. I think I sold it at a strike, I want to say around $80. So if it dips there below $80, I have no problem buying shares of Disney at $80. But in the meantime, I'm going to keep collecting premium. Let's see. Krista has a option spread here. He did a vertical put spread on Carvana. Target price is about $30 to $29 by September. Awesome there. We're getting some folks that are starting to play with some options. CG, UNP, and ODFL price wave this week has been quite dramatic. Definitely for UNP. That's one we're going to touch on here when we go through our earnings section here. Matthew didn't find any bargains this week. No problem there. Hello from Toronto. Walter Rogers. Hello from Toronto, Canada. Apple for me this week. Awesome. Ryan was busy this week. He bought some VTI, and Netflix. Awesome. Fine West buys OKE, KMI, ADC, EPR, PFE, OCSL, and BK. So that was definitely a big first 4 days in the market for you. Agree Realty is one that I covered in a recent video that I just put out. We put that one out last week, I want to say. That's one that I like a lot. It's got a ton of similarities to that of Realty Income. Now, not on the same scale as Realty Income. So when you look at like exposure rate of their top tenants, it's going to be very different. So if you're investing in Agree Realty, you definitely want to be comfortable knowing that, they have, I think Walmart, last time I checked, Walmart was their largest tenant. So, I have no problem with Walmart being the largest tenant and maybe having a 6% ABR exposure there. No problem. Just know that moving forward. Lex sold a NEE put there. Awesome. Lex is collecting. He's starting to get into the option game a little bit. Dennis, AMT and SCHD. Those are two solid ones there. AMT is at a great valuation for long-term holders right now. Vici was in the news. So Adam bought some Vici and some TJ Maxx. They had acquired and started to do some loans and the right buying, getting some preferred equity to be able to buy a spa. I haven't read up a ton up, but I saw their CNBC. So that one's they had a news article that had come out, and they did a full-on interview with the two CEOs. So definitely one to check out there, and I want to read more about. So hopefully I'll bring some more. The next Dividend Power Hour, we can talk a little bit more about Vici and that. What they agreed on there. So AbbVie for Shane. AbbVie, a nice day there. Yep, they reported earnings. We're going to touch on AbbVie there in a second. And what else we got here? I'm just scrolling through. Cash secured puts seem like a great strategy. Yeah, Chris. So for cash secured puts, when there's a stock that I like, and maybe I like the stock, but I don't like the valuation. And if you like a valuation that says $5 below right now, $10 per share, whatever it is, 5%, it's probably better to use percentage terms. You can sell a cash secured put and start collecting premium. If that stock falls below your price, which is where you were comfortable buying at that valuation, you keep the premium and then you get to buy at a lower price. So maybe it's a 10% drop or so, or a 7% drop, whatever it is. Cash secured puts are a great way, and it's a way that I utilize a lot to not only gain premium, but also to jump into stocks that I like instead of just buying them outright right there. Now, I still do that. I still buy stocks outright right at the spot they're at. But a lot of the time, if I want to enter, maybe I'll buy $2 or $3 below, especially if I want to buy at least 100 shares. So again, you have to be able to buy 100 shares there. So Doug, great to see you there. Thanks for joining. So let's get back to our slide deck here and keep rolling. So the Dow Jones, I mentioned the Dow Jones streak is over. So the index snapped a 13-day win streak today, which is unfortunate because, I would have loved to come on the air and talked about how this is a 14-day. We're going to keep that alive. How long? Here's the first question. How long do you think this Dow Jones streak is going to keep going? But that was definitely not in the cards today. And that's all right. So this 13-day streak, though, this was the best winning streak we've seen since the 1980s. But had they gone to 14 and just eked out one more, today would have broken a streak record dating back to 1897. So that would have been impressive. The 1980s, that's a great era. I may be a little biased, but dating a record dating back to 1897, that would have been very impressive. And during that streak, so over that 13-day period, the Dow Jones Industrial Average rose 5% during that streak. Doesn't sound like a ton, especially over a 13-day win streak. But again, this is an index. Indexes don't move all that fast. So 5% for an entire index is quite impressive there. So why do we have this streak? Is what a lot of questions I get right now. Well, recession fears are starting to ease. We saw, inflation start to come down. The consumer, we'd already looked at the consumer confidence report that, consumers are feeling a lot, at least in the near term, a lot better about where things are headed. Earnings are looking good. We're going to look at earnings there. So, and a lot of the companies that reported saw some big moves. So components within the Dow Jones, so those 30 stocks that are in that. The Fed is nearing and looks to be particularly already at the end of their rate hike streaks. And we're going to talk about that here in a second. And we just touched on inflation. So in the last month, inflation grew only 3%. The Fed has a target around 2%, and that's more on the core CPI, and that is still up at 4.8%. So we're still dealing with high inflation at 4.8%. That's the real one you want to focus on. That's the CPI number that the Fed focuses on. It takes out energy and food, which is a lot more volatile. So we're still at 4.8%. Things are way off of the highs. So trending in the right direction, but still high nonetheless. So recession or not, that's really been the focus here. And we've had this rally for quite some time now, and it's really been a battle between bulls and bears. Are we going to have a recession? Are we not going to have a recession? And it's not something where, I've kind of been middle ground trying to talk to you guys on a weekly basis here on this show on the Dividend Power Hour and just talk about how there's some things that we want to look out for and be mindful of. But at the same time, I think you could probably date back to all of our Dividend Power Hour shows here and just talk and say that, there wasn't one time where we went on here and said, it's time to sell our stocks. It's time to, reduce our positions and get completely out of these stocks. I have always said, and I say it, almost on a daily basis on social media, I prefer time in the market over trying to time the market. It's a dangerous game. And as we have seen in this run of late, it's been, had you been out of the market, you would really be, hitting yourself right now saying, oh man, I thought this recession was coming. All right, it's coming next week. I'm going to wait for the drop. It's going to come next week, next month, next year, who knows? But you're stuck here waiting when we've had solid gains. We saw the S&P 500 is already up nearly 15% year to date. That's a solid move for an entire index. So GDP grew at a 2.4% rate in the quarter. So in Q2, analyst estimates were looking for 2% growth. So that was a solid beat there. And what we saw in Q1 was that same 2%. So we actually grew faster in Q2 than we grew in Q1. So that Q2, Q3 range is really where those recession fears were starting to build up. Consumer spending also increased 1.6%. So folks are still spending more than they did the prior year. And consumer spending accounted for 68% of GDP, so of all of the economic activity during the quarter. But that was down from a rate of about, I want to say 4%, 4.2%. I have it right there. Hello. Consumer spending grew 4.2% in Q1. So that is trending in the wrong direction, something to definitely keep an eye on moving forward. So now we've touched on this. Q1, we have a lot more economic data. We have inflation data. We've seen Q2, Q1 GDP come out. We've seen consumer confidence. We know where housing continues to go higher, even though we're at 7% interest rates. Do you now, and I think I ask this almost on a weekly basis now, do you believe we will fall into a recession? Have you changed your mind at all? Do you now believe that the U.S. will fall into a recession within the next 12 months? Let me know down in the comments below. So let's see what you guys think. Do you think we will fall into a recession, I should say, moving forward? And I will keep going here back into the comment section just to make sure that I did not miss anything. So JMD, hello to you. The J had a question on options here. Do you make money covered puts when the stock price goes up? Do you make money covered puts? I don't know if you're referring there, the J, to covered calls. That's going to be more on the upside, or if you're referring to cash secured puts. So let me know in the comments, and I can hopefully answer that question a little bit better there. Regardless, though, I think, Chris is alluding here, whether you're selling a covered call or a cash secured put, you keep the premium. So if the option contract doesn't go your way, you're going to lose money on it. You still collected that premium that you got from day one. That's yours to keep regardless. Jim, late to the party. No worries. Glad to have you again. Looks like the J got his question answered there. I tried and messed up bad. Very hesitant. No problem. We are here to learn. This is a learning environment. Onwards and upwards, Doug. That is right. So Gretch says, yep, you can practice. So they have simulators, paper money, practice money, whatever you want to call it, where you can kind of play around with options. That's always a good one to do. Any other questions we got out there that I'm missing? So let's see. Do you believe we will fall into a recession here in the U.S. in the next 12 months? Tammy says no. Steve says yes. JMD says no. William, no. I think it depends on employment. That's the thing that's really held up very strong. We're literally, I think Powell said in his conference, we are literally right at around the same spot when the Fed started hiking interest rates back in March of 2022. Unemployment is at the same spot it is at today. And that is fascinating considering how fast and how many hikes we have done from 0 to 5.5% or whatever we're at now. That is fascinating. That is definitely an area that I've touched on, thinking that unemployment has to start breaking. Employment has to start breaking. We're seeing these layoffs, but people are getting laid off and just getting hired back. We've seen it in the unemployment that I touched on earlier, how that continues to drop now 2 weeks in a row. So definitely employment is definitely the key there, because obviously if people get unemployed, can't get new jobs, unemployment ticks higher, they don't have as much to spend. We're going to see consumer spending drop, which then and you could see that revolving, how that kind of revolves into the things where consumer confidence is going to drop. And it just goes on, so on and so forth. So what else? We got a yes here for falling in. Lex says, so much stimulus, something may break from the Fed action. Jim, the 1.6% in consumer spending, is that attributed to an increase in the cost of goods and or services? I think that was just an overall adjusted spend number there, Jim, but that is definitely a good question that we can definitely look into offline and hopefully get you another answer there. What else we got here? If I can buy cheap, I'm all for a recession. That is right, Matthew, there. So those are some. So it seems like we're kind of split there in terms of, if we're going to fall into a recession or not. So let's keep rolling here. And I'll try and get through all these questions that I see, but thank you guys. Keep them coming. So we are in the thick of Q2 earnings season, as I'm sure you've watched and see, hot off the press reports coming through. There's been a lot of negativity around Q2. So here's a list of, the companies that are earning or reported earnings, have reported or are reporting, if you're still on, Chevron and Exxon for tomorrow. But, for the majority, we've already got through the week, and all of these companies have reported their Q2 earnings, or whatever, whatever fiscal year they're in. For, Microsoft, this was their Q4. So they just reported their full year 2022 earnings there. So we're going to go through some of these. Obviously, I'm not going to go through all of them. I'm going to try and focus on dividends reports. Again, I won't hit on all the dividend reports, some of the ones that didn't do much. So let's start here. And here's our Q2 earnings season. If you had any of these in the report, let me know in the comments here. So we have Microsoft, Raytheon, 3M, Visa, Coca-Cola, and Boeing. So we have two slides here that we're going to go through in terms of earnings season. I've written down some notes here in terms of the report. So I'm going to give you the headline reports that you can see here on the slide. So Microsoft, they reported a EPS of $2.69, which was a beat. And they also reported revenues of $3.2 billion, which was also a beat. So the company beat on both the top and bottom line. And as you can see through all 6 of these companies, we see a lot of beats. So, analyst expectations were down a lot. We definitely were looking for negative EPS growth in Q2. But I think, maybe analysts cut things a little bit too far there. So let me look at my notes here. So for Microsoft, we saw Azure grew 26%. That was a little bit of a concern because analysts are still worried about the slowing growth for Azure, which is, as you may know, is Microsoft's main cloud component there, and one of the 3 largest, along with Amazon as well as Alphabet, or Google, if you can call it Google Cloud. But so Azure grew 26%. Cloud overall, that segment was still up 15%. So if we're complaining about a 26%, I understand it's going to slow. We have to know that, though. We're not going to be growing at 50% clips, forever. So 26% is still a great number, great result there for Azure. The real thing that with Microsoft that came up was their AI spending. So analysts and investors kind of got spooked a little bit by the AI spending comment that was in the earnings call, where the CEO of Microsoft came out, Satya, and said that there'll be a gradual increase in FY 2024. So again, this quarter was the end of their Q4 2023 full year. So moving forward now, we're expected some big increases in terms of spending for Microsoft here moving forward. So let's take a look and see what the stock did. Let me switch over here, switch screens for you guys so you can kind of take a look. So let's go to Microsoft, because we had some big moves in the stock. The stock was really priced to perfection. So, you can't get too upset with the move it made. So if we're looking here in the past month, we're kind of back to where we were in the past month. So if we look at, this is dating back to June 28th, we're down 1.5%. But, it's really, what have you done for me lately? And if we bought up here at the 359 mark, we can see that since reporting, Microsoft has fallen 8%. That's a healthy little pullback there in a matter of, 2 days. So, but in the thick of things, we're right back to where we started a month ago. So it's been a kind of a sizable fall for Microsoft in a short period of time, and something to keep an eye on there moving forward. So now let's go back, and then we're going to take a look now at Raytheon, which is another stock that had a huge move to the downside in recent days. So Raytheon, obviously a defense contractor, stock ticker RTX. They reported EPS of $1.29, which was a beat on the bottom line. And they reported revenues of $18.32 billion. So we had a beat on both the top and the bottom line for Raytheon. And when I look at my notes here, we saw a 12% drop after reporting here. So if I go back to, let's look here at Raytheon. So we'll type in RTX here into Google Finance and look at the kind of move that we've seen in Raytheon. So you could probably tell where they reported earnings right here. So we went from $97 even pretty much in the last 2-3 days. We are down 12%. So even worse than what Microsoft was. So that was a rough go there for RTX. And the main focus on that was the fact that they reported some jet engine issues in one of their subsidiaries. This is the interesting thing, though, here, is because when I'm looking at the notes and I was going through the report here, they're talking about, a lot of these folks that have these jet engines that need to be inspected and may have to be even replaced. They're going to have to provide new planes or aircraft, whatever type of aircraft this is in particular. So they're going to have to lease out some of those. So when they go through and say, they went through all the customers that they have, they noted that this could be upwards of they mentioned a $500 million, but I'm going to say, let's double it and say this could be a $1 billion issue. I think they were around 500 or 600 million is what I saw mentioned. Again, just quickly going through the notes here. So let's say it's a $1 billion issue. RTX fell 12% after reporting earnings and reporting this jet engine issue. This is a company that has a market cap of $124 billion. So why would it lose $12 billion in market cap from a $1 billion jet? That shows me that this is an overreaction. So what did I do? Right when I saw that reaction, the stock was down 12%. Boom, I sold a cash secured put. I said, hey, if I already own RTX. I don't own as much of as I used to, or as much as I own of LMT. So it's towards the bottom of my portfolio. But I sold a cash secured put. for about 5% lower. I said, okay, I'm down 12%, or I'm not down. The stock's down 12%. If it falls another 5% and is down 17%, I will gladly buy RTX there for a $1 billion jet engine issue. Of course, the stock popped back up. This was yesterday. I think I made probably $300 or $400 just on that quick option trade there. So that's kind of, I like to sell cash secured puts on big moves to the downside. I like to sell covered calls or call option spreads when we see big moves to the upside. That's why I love this earnings season all the time, because the option markets just really get fired up, and you see these overreactions a lot. So it's hard though, because you got to quickly read the report, see what's going on. Make sure we're not going to do like a catch a falling knife here like we've seen with 3M or something in the past few years. 3M actually had a good report, so I shouldn't mention them right now because we're going to look at them next. But you got to be careful there, because there are big swings during this time of the year. So let's go back. Let me see what else I have here. So in terms of Raytheon, so they have a backlog. That's the big thing with the likes of Boeing, with the likes of Lockheed Martin, Raytheon, these defense contractors. They have big backlogs because they can't build. It takes a long time to build these planes. They have a backlog of $185 billion. This is one reason that I love, this aerospace and these people that build these commercial airliners or these defense contractors, because the backlog is there. It's kind of like a REIT. If you have a 10-year lease, the cash flows that are going to be there the next 5 or 10 years. We know the backlog. We know there's $185 billion in the backlog for Raytheon. So that's definitely something to be excited about there. The company. So even though they knew about this jet engine, this is another thing, even though they knew about this jet engine issue and they may need to lease other planes to give to the current customers, they increased their guidance, increased revenue. They did, however, decrease free cash flow down $500 million, which I believe is related to the jet engine issue there. So definitely something that is quite fascinating and something to keep a closer eye on here moving forward. So let's move on to 3M now. So 3M reported EPS of $2.17, which is the beat, and they reported revenues of $8.3 billion. So that was the beat there. So again, this is our third stock in a row, a beat on both the top and the bottom line. And let me quickly go over here to the comments and make sure I'm not missing any big questions that you guys have, so that doesn't get kind of hidden in the comment section there. Mr. Snazzy added some Pfizer recently. The jet engine issue has caused most of the sector to dip outside of the likes of Boeing, which we will look at there. Alaska Air was down big as well. Yes, Lex, I did close that RTX and took my profits on that position there. Chris said nice. Ouch, Enphase. Jim has RTX, Microsoft, and Coca-Cola. And Steven bought Visa, added to Vici, CCI, and SCHD. All positions I own there. So nice buys there for Steven. All right, so let's move on to 3M now. So 3M, we saw it beat on the top and bottom line there. And let me look at my notes here. So the stock move, we saw a 6% move in the stock. You don't see moves higher in 3M all that often, but the stock has been moving in the right direction of late. Let's not look out too far here. So if you go over the past year, you can see from this peak here to the bottom, say July 6th, we were down 36% in 3M. But since then, since that, we'll say 4th of July holiday, the stock is up 15%, that is awesome right there. Since reporting earnings right after, the company jumped 6%, and we are still up 6.6%. So 3M moving, it was below, $100 just a week ago, and now up over $110. So 3M shareholders have to be excited there, but there's still a looming issue with a lot of the legal stuff that is going on with 3M. So my notes here have, we had a 6% move. Sales were down 4.7% year over year. Operating cash flow, though, was up 34%. Adjusted cash flow was up 44%. So operating cash flow was up to $1.5 billion. And again, just like Raytheon, the company also increased guidance. So that's one move I always like to see from companies, is that confidence. You have a quarter or two under your belt now. You also know how the current quarter is going, so that kind of gives me a lot of confidence as an investor as well. So that is what I have for 3M. So let's move back to our slides here and see what we have. So now we're moving over to Visa. And Visa didn't move all that much, so there's not a ton there in terms of price movement after the earnings. Let me see here. Visa reported around here. Stock is down, 2 to 3%. So not terribly. The stock's been on quite a move though. So they reported EPS of $2.16, which was a beat. We're going to continue our direction of beat, and revenues came in at $8.1 billion, which was also a beat. So again, another stock and another beat on the top and bottom line. We go over to Google Finance here. You can see that in in 2023 alone, Visa has been a big time stock. It's a stock that I own in my dividend portfolio. That if you guys are subscribed to the Dividend Investor's Edge, then you know that we have Visa in our portfolio. It's a stock we've covered in one of our deep dives as well. And on the year, that stock is up 13%. So since June, since we've turned into this next quarter here, it's up 3.5%. So there wasn't a ton of movement that we saw in Visa, but in terms, revenues were up 12% on the year over year, and that was driven primarily by volume. We saw volume tick up higher by 10%. So those were kind of my notes that I had, just quickly looking at the Visa earnings report there. So now we move on to Coca-Cola, which didn't have a ton there for me. Coca-Cola, 78 cents in terms of EPS and 12 billion flat in terms of revenue. So if I turn over here to Google Finance, we could see what the stock did after reporting earnings. You can see here July 26th. We did have an initial bump up to 1.5%. We're pretty much flat here. So again, just like Visa, not a ton of movement in terms of Coca-Cola there, but they also increased their guidance on the year, which again was something that I like to see as an investor. So that's one to watch. Still a little bit pricey for my rank. Again, I own this in my dividend portfolio, but not a stock I'm looking to add to per se, right now. So now we're going to go to Boeing, and I understand some of you are probably saying, Mark, Boeing is not a dividend stock. Well, Boeing used to be a dividend stock, and I have a lot of love for Boeing. I'm a little frustrated in the fact, not at Boeing, but going into earnings, I had sold a couple option contracts, cash secured puts. Or I put in an order, I should say. I put in an order to sell some cash secured puts, would have brought in about $500 in option premium. And they did. It was right before the bell closed, and they didn't fill. The number kept going higher, and I kept trying to adjust it right there. Didn't fill. The next morning, I see it. Boom, the shares pop, 10% or whatever. And I was like, oh, that was easy money. But you win some, you lose some. So is investing there. So Boeing reported negative EPS of 82 cents, which was a beat there, and revenues came in at $19.7 billion, which was a big beat there by 1.16 billion. So analysts were well below where Boeing actually came in there. So that was a solid one there. So Boeing popped 9% after earnings there. They're up 19% year to date. So they can rival the likes of Visa that we've seen. So again, if we go back to RTX, and I mentioned it there, any of these companies that are these aerospace companies, whether it's defense or commercial, which Boeing is both, I like to look at backlog. Now, just to put things in perspective here, Raytheon had a backlog of 185 billion. Solid number there. We go to Boeing. Boeing has a backlog of, now they have also commercial as well, but Boeing has a backlog of $440 billion. So that is quite fascinating there. 4,800 commercial airplanes there for that. So what was they had great earnings, but really what was it? They're increasing their production. So they can only build these airplanes so fast. They're getting tons of orders for 737s, 787 Dreamliners. Right now, they've increased production to 38 a month for the 737, and they've increased to 4 a month for the 787. Now, this is where the news kind of came in. The 737 is going to go from 38 a month to 50 a month by the year 2025, 2026. And the 787 is going to go from 4 a month to 5 a month by the end of this year. So that was some, very positive news in terms of shares of Boeing there. So if we creep over here to our Google Finance sheet, we can see what Boeing has been doing. Again, not a dividend stock right now, but they have been in the past, and I believe they will be a dividend stock again one day, just with the amount of free cash flow that the company continues to generate now and kind of get back into a groove. So, excuse me. So just year to date, the stock is up 19.6%, as I alluded to. But you can see this move here after they reported earnings. The stock jumped 9.2%. So just an overall solid report in terms of earnings and solid report in terms of guidance and increased production moving forward. So good things around Boeing. It's a stock that I'm looking at closely, even with a 9% move higher. So definitely one to kind of keep an eye on if you're looking for a good stock, and even though it doesn't pay a dividend there. So let me creep over here to the comment section, make sure I'm not missing anything. Don't want to leave you guys hanging there. So what do we have? Mr. Snazzy had to add to my RTX position when it dipped. That's always a good time to add to that. If you believe in the company long term, and you get these opportunities and these big drops, that me selling a cash secured put was me saying, hey, I'm fine buying shares here. I think I sold about five option contracts. I'm fine buying them at this, down 17% in an overreaction, what I believe is an overreaction. But it never dipped below. So I closed that position. I'll probably do another one here real soon. So what else do we have here, guys? Danzo, I like Alexandria Real Estate, one we've talked about. That's an office REIT that we've talked a lot about on this channel. Been adding to that since it dipped to 113. That's one, if you like that one long term, like I do, just continue to add. REITs aren't going to pop up. You're not going to see a 15% move all that often in a REIT, but you're getting in at a great valuation. That's what you have to know going into that and building these long term positions. Danzo, 99% fixed rate debt, no maturities until 2025. And he's talking about Alexandria there. Have you talked about Bristol Myers Squibb? No, we have not. That is one that I didn't get to the report on that one, even though I am very soon, because that is a top position for me, and I really want to get into the earnings call and everything there as well. Diane added to Bristol Myers today, in fact. So let's go over and take a look. So I can kind of show, since we're on the topic of Bristol Myers, we're not touching on it today on the reports or anything, and you guys can see what Bristol Myers is doing. So they're down. Let's look at the past month here. You can see when they reported. So July 24th. Since then, after this earnings, now we are down 6% on Bristol Myers. So definitely one, if you're looking to get into a very, very low valuation, definitely one to look at. High dividend yield. That dividend yield is going to be up over 4% now. So, Bristol Myers is one that is a pain point in my portfolio right now, but not one I'm looking to sell. All right, so let's move on to our next 6 stocks. So we had Microsoft, Raytheon, 3M, Visa, Coca-Cola, and Boeing. Now let's move over to Union Pacific, McDonald's, AbbVie, which I know is a fan favorite, not only of mine, but many of you, and then Intel, which is fresh and hot off the press there. We will touch on that one quickly. Obviously, I haven't had a chance to listen to that earnings call, which is probably going on, might already be wrapped up by now. But let's begin with Union Pacific, which saw a big move in the markets here. So Union Pacific, if we switch, let me switch over my notes here to the next page. Union Pacific had and there's no other way around it, is Union Pacific had a terrible quarter. They are the only one that we saw. So if we go back to our slide there, EPS $2.57, miss. Revenues $5.96 billion, miss. They're actually the only one of this. How many we look at here? 6 there, 9. We looked at 10 stocks today. They're the only one that missed. I didn't look through these and say, hey, we're going to pick all beats and one miss. No, I just went through the ones that I had looked at recently. And so Union Pacific just had a rough quarter. What they did do, though, is they announced a new CEO, Jim Vina, effective August 14th, will take over the reins. So the prior CEO that's been there for a while was one of those activist takeovers that wanted a new CEO and kind of pushed him out. Well, that actually happened. So we have Jim Vina now, which I believe used to work at, I want to say, CNI. So he's got rail experience. He used to be at Union Pacific as the COO. So he's familiar with the company. He's familiar with the rail industry. But to make the stock jump 11% on the announcement of a new CEO, that's an overreaction like we saw with RTX. That might be an overreaction to the other side. No. Again, I love Union Pacific. I own Union Pacific. I don't own a ton of it, but at the same time, to see a 12% or 11% increase just because we have a new CEO, not something that I'm all that crazy about. So if you look here, you can probably tell when earnings were. We jumped 11% right out of the gate. It's starting to wear off a little bit as expected. And now since reporting that, we are still up by 7.5%. So the stock's fallen about, we'll call it 4% since that announcement there. But the company saw operating revenue down 5%. Business volumes were down 2%. Not things you want to hear. So we had lower volumes, lower fuel surcharges, unfavorable business mix, which is kind of the thing you throw in when you had a crappy quarter. We had unfavorable business mix. The products that we were carrying and had in our cars weren't as profitable. That's just one you could throw in there and just say, okay, that we'll blame it on that. So Union Pacific's got the transportation is an area that you can look at if you're thinking about a recession. So with the transportation, if we're buying things, they have to be shipped to you. If manufacturers are building things, they need products, and they need products shipped to them. So transportation is going to be that first area of the business, of the economy, that you're going to see start to slow down if, in fact, we are headed towards a recession. We've seen that now with CSX. We have seen that now with Union Pacific. Volumes down, business mix down, business volumes down, carloads down. The length of the locomotives that it's pulling down. So this is things that are trending in the wrong direction. So definitely something to keep an eye on, because transportation had been moving in the right direction for quite some time. But these two earnings from Union Pacific, CSX, have really given me a little bit more pause. I know everyone wants to, wave the flag and say, nope, we're full force into the next bull market. Well, let's hope so. And again, that's why I say stay invested. Time in the market over trying to time the market. But there are some red flags that are out there, and Lex has alluded to some of those as well. So let's keep going now and check out what is our next stock on the docket here. So we have McDonald's. McDonald's reported EPS of $3.17, which was a beat. We're back on the beat train now. And revenues of $6.5 billion, which was another beat. So McDonald's, and for those of you who don't follow me on Twitter, or X, I guess it's called now, you probably haven't seen that I always say McDonald's is a real estate company I will not explain. The fact is McDonald's doesn't operate a lot of the McDonald's stores that you may visit frequently or have in your neighborhood. I don't go to McDonald's all that often, but McDonald's is a real estate company, because what they do is they own the real estate and they collect a franchise fee for the most part. But when we look at the reporting, they saw global comps increase by nearly 12%. All segments across the globe showed not just an increase, but they showed double-digit comp growth. So that was a very solid quarter for McDonald's. If we head over here to Google Finance, we can see what the stock did on the back of those double-digit comps here. So the past 5 days, you can see here we moved from 290. The stock jumped immediately up 2.6%, but has since faded a little bit, and we're only up 1.6%. So again, not a ton of movement in terms of McDonald's, even though they beat on both the top and bottom line. So now let's move over to AbbVie, which is a favorite of mine. And AbbVie has really been focused, and there's been a lot of overreaction around the Humira cliff. Humira has been the best-selling drug in the world for a number of years now. And this was the first year that they lost their patent protection. So you had a lot of generics come on. I shouldn't say a lot. There's one or two that are on that are being sold right now, and there's more coming. So there's going to be more impact, but Humira is still the best out there. It's the name brand out there for a number of the chronic illnesses and stuff that it impacts and helps folks with. So Humira global sales came in at $4.012 billion. And really what investors of AbbVie are focused on is Humira, but it's the up and coming drugs as well. The ones that are going to combine to replace what Humira has done for the company over the years. And those two are Skyrizi and Rinvoq. So Skyrizi came in at $1.9 billion, and Rinvoq came in at $920 million. Now, those numbers don't replace even what Humira is at globally right now, which was $4 billion. These two are right around $3 billion, but it's really the growth factor. So Skyrizi grew 50% year over year. Rinvoq grew by 55% year over year. So still continuing to grow at a fast clip. And management has stated in prior quarters, prior years, that they believe that these two drugs combined will surpass that of Humira. So they won't be blockbusters on their own. They'll still be blockbusters, but they won't be at the level that Humira was. So Humira came in at $4 billion, but that was actually higher than in Q1. So quarter over quarter sales, Humira ticked higher, which was a bit of a surprise there. But they are down from $5.4 billion year over year there. So the company also increased guidance. So, just an overall good report there for AbbVie. And if we go over to Google Finance here, we can show you what the stock did after reporting earnings today. So they were up 4.9%. So we almost made it to 5% there. But it's less. It's not less. It's still a great move there. But look at this move over the past month. You can see, and it's even before that, dating back to June 27th, we were at 132. I sold some cash secured puts around that time, around the 125 level. So I was hoping to get shares, add to my position. I already own AbbVie, but if I were able to buy them at 125, that would have been great. But the stock moved higher. I kept my premium and missed out on adding to it, and that's fine. But the stock is up almost 12.5% in the last month alone. So it has made a sizable move. I think a lot of it has to do with folks are starting to look at the data and say, maybe this Humira stuff is overblown. It's not going to fall off a cliff and go down to $1 billion. It's still generating over $4 billion, and it increased quarter over quarter. So more generics are coming on. So it's going to keep slowly, kind of bleeding out there, but definitely something to watch with AbbVie. So what are we going to look at next here? Our last one is Intel. Intel is fresh off the press here, so I don't have a ton of data on that one because, as I was putting this together, they were starting to do their earnings call. But Intel reported EPS of 13 cents, positive there. Analysts were actually looking for negative EPS, so that was a positive there. Revenues came in at $12.9 billion, beating on both the top and bottom line there for shares of Intel. Stock was up 8% after hours. Let me quickly check and make sure that still stands. Stream over. So after hours, we're up 7.6%. So still right around that 8% number that I stated. The PC market may have bottomed. There were some hints there. The foundry segment, which is a lot of Intel bulls, I should say, are really hyped up on this. That segment saw 307% growth. Now, overall revenue number is still very small. Not really making much of an impact to the business as it only sits at $232 million. But the company is still, management said, on track to save $3 billion in cost savings. So that is huge for shares of Intel. So now, we went through Microsoft, Raytheon, 3M, Visa, Coca-Cola, Boeing, Union Pacific, McDonald's, AbbVie, Intel. Tomorrow we have ExxonMobil, Chevron. So we get to see what those two energy giants. So if you own XLE, those are going to have some big impacts tomorrow, as well as Procter & Gamble. So lastly, now we want to touch on the Federal Reserve, which again increased interest rates, as I mentioned, another 25 basis points this week. The market believes that we're done though. So let me take over here and let's go to the CME Fed Watch tool. So we have a good little break now. You have 54 days, you could see here, until our next Fed meeting. So this is the next meeting here. September 20th is the next meeting, and this is where the market believes we're at right now. 78% are saying that we're going to stay put. We are pausing. That was, even though the Fed in the prior meeting, not this July one, but the June one, said, hey, we're going to do 2 more rate hikes. The market is, again, not believing the Fed and saying 78% believes we will not move. There's still 22% that does believe the Fed and believes we will get another 25 basis rate hike. So let's see what the probabilities are moving forward. And this blue shaded area is really where we're at. Let me zoom in on that so you guys can see that. And it's going to go by meeting here. So here's the September meeting. We saw the 78%. The next meeting after that is November 1st. 66% believe we will still be in this 525 to 550 range. Those are basis points, so it's 5.25% and 5.5 2.5% on the Fed funds rate. And then you can see it's just going to stay paused. Most people think it's going to be paused until March of 2024. And at that point is when they will begin to cut rates. So Jerome Powell's already been on record multiple meetings now saying there's really no way that rate cuts are coming this year. It is more a 12 to 18 month situation and something to think about. But at the same time, the company is still going to be data dependent, and they said they're just taking it meeting by meeting to determine, what direction they're going to go. Do you think we need based on the data? Okay, here's the data. Here's where the next GDP is. Here's where the next consumer confidence is. Here is where inflation is. Core CPI. Is it continuing to go down? Is it continuing to kind of stay stagnant? Which way is it going? Then we will make a decision on, are we going to hike rates again, or are we going to pause? And, with this pausing, it makes things look like they could potentially eke out this soft landing that a lot of folks for a while did not believe that they could pull off there. So that has been, something he's been trying to deal with there. So again, data dependent and taking it meeting by meeting there. So we are at 55 minutes. I want to leave a little bit of time in case you guys have any questions. I'll go back through the comments there. But, if you're ready to start investing and take things to another level and become your own money manager, then consider, inquire. You can email me directly, or you can go to rusonfinancial.com to find out more. I have a 6-week investing accelerator course. It's where you get to work. I only work with 7 people each and every month. You can work with me for 6 weeks. Each session is 60 minutes in length, and we will go through at your pace. I put together a custom program for you, mostly based on education, so that you can be your own money manager. There's no past experience in investing required, and we can even go through options as well. I know there's a lot of folks that say, hey, I've been investing for a while. Let's take off the beginning segment where we're going through a market overview, and at the end, let's go into options, which is usually a 1 or 2 session. I also do that a la carte for folks that are just looking for that there. But if you're also looking for more information on a weekly basis, then consider subscribing to my Dividend Investor's Edge. We have a free one, which is kind of go through your weekly economic updates on the market and dividend stock upgrades and downgrades. But we also have a premium subscription for less than $1 a day. You can get 2 stock deep dives. Take a look at my entire portfolio. You get monthly portfolio updates. What am I buying? Why am I buying it? What am I selling? Why am I selling it? And my 3 stock watch list as well. So definitely take a look at those things. You can see down at the bottom of the screen there, the dividendinvestorsedge.com. You could sign up there for free or the premium subscription as well. So if you guys, that kind of completes things there. If you guys, though, have questions, then start firing away. Let me go back through here and make sure I have not missed anything. Danzo, I'm not brave enough to invest in bank stocks yet. It's hard to understand their balance sheet too. Bank stocks, financial industry area can be a little bit confusing at times. Steven, are there currently any growth stocks that look undervalued? Well, I should say I was actually trying to get into a option spread for Meta, and just like what was the other one I was mentioning that I couldn't get into at the last minute, but I was doing that yesterday, and then boom, they released earnings, the stock went up, my option contracts didn't get filled, so that was a bummer one that I missed out on as well. But Meta and Google are, if you're looking at these Magnificent Seven or whatever they call them now, those are obviously the 2 most undervalued or cheapest, I should say, both in the communication sector. So I own Google, I don't own Meta, but Meta has been on a tear there. Jim on the second slide has UNP, McDonald's, and AbbVie. Nice, Jim, on the AbbVie run there that we've had. What else do we have here? Is it worth buying AVGO, which is Broadcom, at these levels? So I own Broadcom. Broadcom is a solid position for me, but it has had, and I understand the hesitation because it's had to move 60% or higher. And we can quickly go over here. Let's see where Broadcom is at year to date now. It's a tough one because when you want to compare it to the likes of Nvidia or AMD, it's nowhere near those valuations. But if you're just comparing it to itself, it's not terribly priced, but just the run. I just don't go jumping at stocks that are up 60% in a matter of 6.5 months. But Broadcom has a ton of potential. AI has a ton of potential for Broadcom, and we're starting. we've seen Nvidia already make its move. We've seen Broadcom make its move. I'm looking more at what's the next stock that hasn't made its move yet, and the one that I keep waiting on, it's moved a little bit, is, let's see if you guys can guess it, Qualcomm. So Qualcomm year to date, it's starting to move now since this, May, and it's a stock that I've had. I had it on May and I had it on June on my stocks to watch list, and I think I bought it and added to my position in both of those. But they haven't ran the same way that the likes of Broadcom and Nvidia. So I'm looking more at these value Qualcomm type plays there, and you can see here Qualcomm doubles down on its pivot to AI. So Qualcomm is a name that I like a lot. It's up, 17%, 18% year to date. So, I'm going to keep a closer eye on that one. So, but good question. Broadcom, otherwise, great stock, strong dividend growth as well. Jim, UNP is 1.45% of my portfolio. It's up 4.5% total return. Do we think P&G will dip tomorrow? Wish I knew the answer to that one, but let's see. What have we been doing lately, old Proctor? It's kind of been a roller coaster. So the first quarter we dipped down into, what were you, the 130 range? We were down 10%, but since then the stock is up. We are almost exactly even with Procter and Gamble. So what we'll definitely see, where the consumer is in terms of Procter and Gamble. That should give you some good insights as to the strength of the consumer, because a lot of the products they sell are items of necessity. Jim, AbbVie is my third largest holding at 5% of the portfolio, up 36% total return. McDonald's is 11th largest, making up 2.4% of the portfolio, up 17%. Awesome there. So any more questions from you guys? Just had the tax question I posted. Can you post it again, Matthew? I did not see that one there. Post that one again, and I can answer that one. How can the Bitcoin ETF BITO give a 54% yield? Not familiar with that one. Nvidia is overpriced now by a mile in my book. There's better, cheaper stocks out there. So definitely agree with the not being cheap part. Not sure how many, in terms of quality, that company is firing on all cylinders. Everything they touch has been turning to gold. Their products are, second to none in the industries in which they operate. So from that standpoint, it's great. But yes, valuation is a tough pill to swallow right now if you were buying shares of Nvidia there. JC has owned Qualcomm since 2012. Mr. Snazzy, is there any solar stocks worth buying? None that I own or I'm looking at right now. In terms of energy, I own XLE. So tomorrow will be a big day in terms of Exxon and Chevron, because they're about 40+% of that entire ETF. It gives me a spread between those two without owning just one or the other, or having to buy both of them. So XLE kind of gives me those two, and then a slew of other stocks as well. So if they're both down tomorrow, XLE will be down. But hoping for good returns, good results there. So if Matthew's still with us, he can post his quick question on the tax question. Otherwise, you can post it in the comments. Once I see that, I'll get you an answer. But thank you guys again for joining. Diane here has a personal question, and thank you in advance. Today, my mom gifted me RITM. 1,700 shares, cost basis nearly $19. Stock sticking at $10 right now. Any insight on this company? Hold, buy, or sell? Don't really have any insight on that one, unfortunately. I mean, it's great that you got 1,700 shares of that one, but not giving any financial advice there. But let's see. Regarding REIT dividend taxes, is it better to hold REIT investments in a Roth 401k or IRA? So yes, so I own a lot of my REITs or not dividend stocks in a Roth IRA. I try to get as many compacted in there. I've had old 401ks that I've rolled into my Roth IRA as well. Just want to get the taxes up front. Obviously, dividends can have some taxes there. There is a 20% discount, though, with REITs that came with the Tax and Job Act during the Trump administration that a lot of folks aren't aware of when it comes to REITs. So if you do have them in a taxable account, do look that up and understand that more. But if there is room, and you want to move things around, I like to have, for me personally, I like to have a lot of my dividend paying stocks as much as I can in my Roth IRA or Roth 401k. But a lot of the Roth 401k is just going to be more funds. So individual stocks, Roth IRA for me. So hopefully that helps answer your question there, Matthew. That kind of wraps up our time. We're at 1 hour and 4 minutes. Thank you guys. A ton of questions there. It was another great Dividend Power Hour, another opportunity to be able to interact with you guys. I love doing these on a weekly basis. So we'll see what tomorrow brings with Exxon, Chevron, and Procter & Gamble. But in the meantime, happy investing. Have a great weekend, and we'll see you next week. Take care.